Hello, good morning, ladies and gentlemen. And how are you all doing today? Let's confirm we can see my screen and you can hear my voice clearly by typing hi in the comment section so that we can get the session started. I need some confirmations, please. Okay, so let's see what is happening in the comment section. So I want to see some response. So if you can see my screen and you can hear my voice, I need you to type in hi in the comment section. Okay, so what do we have here? All right, we have Z30. Good morning to you. All right. Okay. I have 398. Thank you for that confirmation. Good morning to you. 321. Good morning. All right. 275. Thank you. All right. So I want to see this as a confirmation that we can all hear me clearly and you can see my screen very well as well. All right. I'm excited to welcome you to yet another promising session on the Extreme Speed Live Hub. My name is Sheriff Daramola, and in the next 1 hour, I shall be your host, taking you through on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, before we go into the details of what our expectations are today, it is our culture here that we do a review of all the pairs we've been monitoring since the beginning of the week. We want to see how well the pairs are doing, after which we are going to be making a decision on what our expectations is going to be like today. And if there are any advices or any suggestions, I will be dishing them out through the course of the session. So my advice is that you don't want to miss out on these informations that I will be dishing out through the course of the session. So try as much as possible to stay tuned in so that you don't miss out on any of these data that I will be sharing herein. So with that being said, let's dive into the charts and let's see what is going on in the market. Well, I think I saw Carrie a moment ago. Okay, good morning, Carrie. Thank you for that confirmation. So we have Costil 988, Daya A3, Sabine, all right, 221. Good morning to everyone. All right, Ibrahim. Sabine says he's hearing me double times. Okay, let me confirm that. Let me see. Okay, I just made some adjustment. Can they confirm if everything is sounding okay now? If not, I will suggest you restart your app so that you can increase the audio quality. All right, please kindly do that if the echo still persists. So let me know afterwards if everything is fine. Okay, thank you, Carrie, for the advice. So let's kickstart the session. All right, so the first pair we are going to be looking at is the US oil. In fact, most of the pairs we treated since the beginning of the week has been moving very profitable for us. And what is happening here on the US oil? Well, the first thing we want to do here is to do a replay of what our expectations are before we start thinking of what today is going to be like. Well, where were we as at yesterday? So as at yesterday's live session, we were around the $84.50 area here. And with the situation of things yesterday, before the live session yesterday, we were thinking that we might be having a trend continuation pattern. And one thing we said here after identifying the consolidation phase here between the $85 level and the $84.50 area, and we said if we're going to be having a breakdown of that structure evolving into a trend continuation pattern in the form of a breakdown retest of structure, we want to be joining the decline to the downside. And remember, I told you something here yesterday, is that if price does not go to the downside, and if we are going to be thinking of buying the US oil, we want to see a breakout of the $85 level, which is exactly what happened during the course of the New York session yesterday, as we saw this engulfing candle taking price right out of the $84 area, which has been holding buying pressure for over 24 hours. And that was a very good signal for us to take advantage of that bullish momentum. And remember, for those who took advantage of this opportunity here, right below the $88.20, we took advantage of this bearish momentum at the beginning of the week. Remember, I told you all to move your stop loss to somewhere right around the $85 area, just in case we might be having a rally. And this is exactly what happened. We were taking out all of our previous position with about well, the first position closed with over 300 pips in profit, and then the second position closed with about let's see, about 250 pips in profit, with a minimum of about 550 pips in profit thereabout, which is not bad anyway. And we took advantage of this bullish momentum right above the $85 area as price has continued to move in our direction. So with the bullish momentum running at this point in time, the first thing I'll be saying right here is to move your stop loss accordingly so that we can lock in some profit. We don't want to get caught up in any sudden pullback that might likely happen at this point in time. So what we want to do here, what we want to be doing here is to move our stop loss somewhere right below the $86 level. This level has been the major determinant of price action in the past. Remember, I will be sharing that with you in a moment. So let's just lock in our profit at this point, and let's see what our expectations will be like for today. So to do that now, we want to scale up to the daily time frame. We want to see what is really going on the higher time frame, after which we are going to be coming back to the 1 hour time frame to make a decision for today. So with that being said, let's dive into the daily time frame and let's see what is going on right here. Okay, so we have the daily time frame loading up. Okay, give me a moment, please. I'm trying to set up something here. All right. All right, so we have the daily time frame opened up. Let's reset this a little bit so that we can have a better perspective into what is going on here. So here we go. We have the daily time frame running. And the first thing we obviously observed here on the daily time frame is that price action has been on a long-term bullish momentum. And as a result of this, we were able to connect the series of lower highs here to give us that resultant bullish trend line that has been holding bullish momentum since 2021. So we have this bullish trend line holding price action. Then the next scenario we want to be looking at here is the key level at the $86 area. And you can see how this key level has been a major determinant of price action, at least in the last 3 to 4 months. We saw how this key level at any point in time price comes within that area, we begin to see either a buying pressure or price breaking down or breaking out of that structure to incite a movement in the direction where price was broken to. So we had a situation here where price was participants in this market gathered here to buy the US oil. That was in the month of August. And if we fast forward into the month of September, we saw how this level was also holding buying pressure. But the pressure here wasn't that strong enough, as it was met with a very strong resistance from the sellers, which finally pushed price right below the $86 level in the month of September. And throughout this month, price continued to trade right below the $86 area to give us a clue of how strong the sellers are at that particular point in time. However, during the month of October, we saw a final breakout of the $86 level, which also shares a confluence with the bearish trend line that we identified here. So we have both the breakout of the trend line and the breakout of the key level at the $86 level to incite a bullish signal. So we had a breakout of the structure, and like I told you, this is a reflection of the OPEC Plus decision a couple of months ago to cut oil production, and this was reflected on the chart with this engulfing candle which took price out of the $86 structure. And as soon as price got into the $93.50 level, we started seeing selling pressure around this area. In fact, we saw one in the month of October. I think the first week of October, we saw selling pressure here, which incited the retracement phase of this impulsive move. And from a technical standpoint like this, whenever we have a breakout of a structure like this, both the bearish trend line and the key level here, we expect that price is likely going to come back to do a retest of that structure, which is exactly what happened here. So we saw price come back to do the retest of the structure, evolving into a consolidation phase, which at this point in time looks more like a reversal pattern. We saw the breakout of the $86 level one more time. Price did a retest of that structure, and we enjoyed this bullish momentum once again right back into the $93.50 area. And there is something very peculiar about this $93.50 area, and that is participants in this market are seeing this area as a selling niche to sell the US oil. So as soon as price gets into the $93.50 level, we started seeing selling pressure from that area to negate all buying momentum. And the same thing happened last week. We saw the selling momentum here, which pushed price again right back into the $86 area. Now, going into this new week here, at the beginning of the week, we identified a structure here at the $89.50 area. And the reason why we identified that area was simply because this level, as at one point in time, has been holding selling pressure. If we go back to the month of October, I think the second week of the month of October, we saw how this level was holding selling pressure. The same thing happened during the later part of the month of October. We saw selling pressure around that area. Though we had the breakout here, price came back again to do a retest of that structure, and then which led to the breakdown of this bullish trend line that has been holding price action in the last 4 to 5 weeks now. So we saw this bullish trend line broken to the downside, showing a confluence with $89.50 level. And from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that price will at one point in time come back to do a retest of structure to incite a trend continuation to the downside. So at the beginning of the week, we enjoyed this momentum to the downside. Remember, we took advantage of this move right around the $89.50 level, and we saw this engulfing candle that took price right back into the $86 area. So at this point in time, this is where we are as at today. And one thing we have observed here in the last 24 to 48 hours on the US oil is that the $86 has continued to remain a demand zone for participants in this market as we continue to cite buying pressure around that area. You can see this engulfing candle coming right back into this area. It was met with another buying pressure here. I am of the opinion that we might be having another respect of this key level one more time, which also shares a confluence with the bullish trend line that we identified earlier. Remember, we identified this green bullish trend line, so we can see again this key level also lines up with that bullish trend line, and I'm of the opinion that we might be having a bullish momentum during the New York session today. So with this information we have gathered here on the US oil daily time frame, let's scale back down to the 1 hour time frame. Let's look at what is really going on around here, after which we are going to be using the structures around that area to make a technical decision on this one. So in order to do this, we want to scale back down to the 1 hour time frame. Let's see what is going on the 1 hour time frame, after which we want to be making our decision as projected. So this is the scenario we had here. So since the beginning of the week, we have been very profitable on the US oil. We took advantage of this bearish move after price came back to do a retest of this bullish trend line. Remember, we had this bullish trend line broken here to the downside to signal a bearish momentum, and we were fortunate enough to take advantage of that move when we started seeing reversal patterns around this area. So we joined this decline around this area at the beginning of the week right into the $85 level. And in the last 48 hours here, we can see how the area here between the $85 area and the $83.70 area has been holding buying pressure. So we can see here we have this buying pressure around this area. In fact, after looking at it technically, I was able to see something that looks more like an inverse head and shoulder pattern. Let me show you what that is. So we had this impulsive move to the downside. We have the left shoulder here. Price came back into the $85 level, which at this point in time is serving as a neckline of that reversal pattern. We saw the head here. Price came back to the $83.70 level. Price came back again to the neckline area at the $85 level. Then we saw the right shoulder here before the breakout of the $85 area, whereby confirming a mature reversal pattern as we saw the breakout of the $85 level. Now, with price breaking above the $85 area, I'm of the opinion that we might be having a reversal pattern going on here. And if we look at what has been happening here since the beginning of the month, we can see how the $85 area has been holding buying pressure since the beginning of the month. We saw an attempt here at the beginning of the month here. Then if we fast forward into the second week of the month of November, we saw another buying pressure around the $85 level, and this made us to identify this area as a demand zone, as this area has been negating all selling pressure at this point. So now with the situation of things now, considering what happened during the later part of yesterday, we saw the breakout price climbing right above that demand zone area, and since then price has been trading right above this level. So I'm of the opinion that this trend continuation might continue to the upside, and as a result of this, we took advantage of this move right at the breakout of the $85 level as price moved over how many pips in profit? Price moved over, let's see, over 250 pips in profit to hit the $87.60 area. So now what happened here also was an interesting situation. After this impulsive move to the upside, we saw a retracement phase back into the structure. So I was able to identify a golden zone area after bringing out my Fibonacci retracement tool to locate an area between the 50 and the 78.6% of the previous impulse leg. So when I brought out my Fibonacci retracement tool and we run it through the previous impulse leg here, so we have somewhere between the 50 and the 78.6 as a buy zone where we want to be looking out for buying opportunity. I shared this on my TradingView platform this morning, and I said, okay, fine, if price comes within the structure and we start seeing buying pressure around this area, we want to be adding more position to our existing trade. And lo and behold, this is exactly what happened. We started seeing buying pressure around here, and hereby making the neckline, the key level at the $86 area, has a neckline for further buying opportunity. So price broke out of that structure and price has continued to climb to the upside. So at this point in time, for those who are taking advantage of the second opportunity here, kudos to you for being on standby to take advantage of this move. So the next thing we want to be doing, like I said earlier, is that we want to be locking our profits by moving our stop loss accordingly to somewhere around the $86 area. And let's see how price action is going to play out from this time on. Now, for those who had missed out on this opportunity here, that is both the one we took at the $85 level and the $86 area here this morning, let's see if the market is going to be presenting us with another opportunity to either add more position to the existing trade or join afresh. So what I'll be doing here is to bring out my line chart. As we can see, since the beginning of the week, we have been witnessing buying pressure, hereby giving us a trend situation that looks more bearish at this point. So what I want to be doing now is to connect the series of lower highs here to identify this trend to the downside. So if we connect the series of lower highs here, hold on a second. So as you can see what we have on the screen, so I was able to connect the lower highs here. The first touch here was here. We had that identified, and we have this one too identified here, and then we have another one here around this point. So what we will be doing is to bring back our candle chart and look at what the structure is saying. So we've been saying that since the beginning of the week, price has continued to find lower lows and lower highs, And now at this point in time, we have a situation where price has broken that trend line a little bit to the upside, though we are still around that area. So we are at a very critical point in this market. So all we want to be doing is to see if price will continue to trade right above that bearish trend line. So we want to be seeing a situation where we see an engulfing candle taking us out of that structure, and if price comes back to do a retest of the trend line, then we want to be thinking of adding more position to this existing trade. So that is one scenario we are going to be looking at as we head into the New York session. Then the other possible scenario I am seeing here is the, hold on a second, the $87 level. As you can see how this level has been holding. At one point in time, it held buying pressure here at the beginning of the week, somewhere here before we cited the breakdown of that structure. And during the course of New York session yesterday, we saw a retest of that level as well at this point. So what I'll be doing here is to extend this a little further to the future, and let's use that as another yardstick for trading opportunity for today. So we have this level labeled at the $87 area. So for the sake of clarity, let's have this labeled. So we have the $87 area figured out at this point. So for those who had missed out on both of this opportunity here, the one here and the one here, then let's see, since price has already broken out of the bearish trend line, you could join outrightly from here, but I will be suggesting that we remain patient and wait for price action to break above the $87 level. We have an engulfing candle closing right above that structure. Look out for selling pressure as price comes back to do a retest of the $87 level on our lower time frame to join or add more position to the existing trade. So at this point in time, I will be thinking of where we might take profit target B with the current structure that we have here. Well, for me at this point in time, if we zoom out a little further, we can see how the $85 level has been a strong demand zone. So we can see that this level has been negating all selling pressure at this point. So one thing I'll be advising us to do here is to extend our take profit target to somewhere around the $92 area, somewhere around here, $92.50, $92 area. And the reason is simply because of the structure we have here. We saw selling pressure around this area during the course of last week's trading session. So let's see how far this momentum is going to go. But there is a catch here. So as soon as price continues to the upside and with our take profit target around the $92.50 level, what I want to be advising us to do is that as soon as price gets into the $89.50 area, an area which has been the selling pressure since the beginning of the week, we had it broken here to the downside. If price comes within this level, kindly move your stop loss accordingly to protect your previous position. Somewhere around the $88.20 area is most likely to be presentable at this point. And if price continue further to the upside in such a way that we have a breakout of the $89.50 level, retest of structure, then we want to be adding more position to our existing trade, hereby pushing further the take profit target further up, probably to the $100 area. So that's how we want to be trading the US oil. If you have any question regarding what I've just explained so far, feel free to drop in your inquiries in the comment section, and let's see how I can be of help in that regard. So I will be taking the next 10-15 seconds to read through the charts and see if there are any questions, and if there are no questions, we'll just move on to the next pair. I think I took a lot of time on the US oil this morning. It's almost 26 minutes out of time already. So let's quickly see what's going on here. All right, I hope the double voice sound has been resolved. Hey, hi Max, good morning to you. How are you doing today? All right, 984, good morning to you. Then we have Sulefa. All right, good morning. Sajilo, good morning. 607, good morning. You're welcome. All right, so that is that on the US oil. If you still have your questions, you can still drop them in the comment section while I move on to the next pair. So the next pair we are going to be looking at this morning is actually an option, and that is the US tech. And in fact, the US tech has been doing a bullish tone since the last 24 hours. Well, remember, let me zoom out a little further so that we can see things more clearly here. So remember, we have been on a bullish momentum since the later part of last week's trading session, as we saw how price has been caught within a consolidation phase since the beginning of the week. So we had a situation where price has been caught within the $11,850 level, which has been holding selling pressure since the beginning of the week. And then we had the 11,720 area, which has been holding buying pressure since the beginning of the week. And as at yesterday, we were around this point yesterday. We were around the resistance level of the channel yesterday, and I told you something here that because of the consolidation phase here, we can see that these are more or less telling us that participants in this market are actually indecisive at this point as price action continues to juxtapose between the $11,850 and $11,720 area. And one thing I said here is that we want to remain patient and wait out for signals to happen in the form of either a breakout of that structure or a breakdown of that structure for us to join whatever direction price action is leading us to. Unfortunately for us, yesterday we saw the breakout of the $11,850 area to give us an opportunity to join that bullish momentum, and price actually moved over how many pips in profit? Over 220 pips in profit before we started seeing that selling momentum that took price right back into our entry zone. Well, for those who are taking advantage of this opportunity yesterday, that is around breakout of the structure, kudos to you for being on standby to take advantage of that move, and I hope you are able to close that trade with some profit as we started seeing price come back into the entry zone. And it appears with the situation of things this morning, it appears that the market is giving us another opportunity to join that rally as price has actually come back to do a retest of that resistant level. So we saw the breakout yesterday. Price came back to do the retest of structure during the later part of the New York session yesterday, and since then we have been witnessing buying pressure right around the $11,850 area to give us further confirmation and comfort that our buying momentum here is looking very visible at this point. So for those who are taking advantage of this one this morning as price continue to reject this area, kudos to you. At this point in time, you will have been in about, let's see how many pips in profit right now, with over 75 pips in profit, which is not bad anyway. So what I want us to be doing right now is to lock in some profit, moving your stop loss accordingly to your entry zone. At least if price takes you out, you will neither be in the loss nor profit, and which is not bad anyways. So let's see how we are going to be trading this. Are we going to be having another opportunity to add more position to this trade? So let's quickly run through the daily time frame. Let's see what is going on the higher time frame, after which we'll be coming back here again to project what our expectations are for today. So going a little further to the daily time frame, what do we have here? Well, on the daily time frame, it's obvious that price action has been on a bearish momentum since the beginning of the year, and as a result of this, we were able to connect a series of lower highs to give us that resultant bearish trend line that we were able to figure out here, and has been guiding selling momentum since the beginning of the year. But something interesting happened during the month of June, as we saw every attempt by the sellers to push price right below the $11,000 level has been met with strong resistance from the buyers. We saw this attempt here in the month of June, and the same thing happened in the month of September. In fact, the later part of the month of September, we saw another attempt by the buyers multiple times to push price to the upside, but this was met with strong resistance from the sellers. As you can see how the $11,700 area has been holding selling pressure in the last couple of months to negate all buying momentum at this point. In fact, the selling pressure even pushed the demand zone further to the downside. So we had a new demand zone at around the 10,600 area, as we saw buyers negating all selling pressure from that area, and it appears the participants in this market saw the $10,600 level area a very cheap price to buy the US tech. And during the course of last week's trading session, we saw this engulfing candle that took price right back into the $11,700 level, a move which we actually took advantage of last week, and price moved back into the $11,700 level, a level which has been a strong selling niche for participants in this market in the last 2 months. And we finally saw a little breakout of that structure during the early days of this week. And at this point in time, we started thinking, okay, fine, if price has broken above the 11,700, let's see what is really going on around this area. Are we going to be having a reversal pattern around this area? And that was our projection at the beginning of the week, looking out for reversal pattern here to send price crashing to the downside, or The other scenario is if we are going to be seeing a trend continuation pattern around here, breakout retest of structure to climb to the upside. And in fact, this is exactly what has happened here as price has continued to trade above the $11,700 area, taking out all the sell position that has been holding this pressure in the last couple of months to signal a trend continuation to the upside. So at this point in time, since price has been trading above the 11,700 and we're already in this trade running in profit, I've told you to move your stop loss accordingly to lock in your position. And one thing I'll be saying here is that our take profit target shouldn't be more than this trend line here. I remember this trend line has been holding selling pressure since the beginning of the year. So let's extend our TP target to somewhere around the 12,400, 12,500 area, which lines up exactly with that bearish trend line. Let's see how price action is going to relate to that structure there. Are we going to be having a reversal pattern there to respect that trend line one more time to send price crashing to the downside, or are we going to be having a breakout of that structure to send price going to the upside? So these are the scenarios we are going to be looking at today. Let's scale down further to the 1 hour time frame. Let's look at what is happening here and let's see if our buy opportunity is still going to hold, and let's see also if the market is going to be presenting us with a second chance to join the rally to the upside. So scaling down to the 1 hour time frame, what do we have here? So let's do a reset of the chart, and we have the situation in hand right now as price action has continued to trade above the $11,850 area. So for those who are taking advantage of this move right above this area, lock in your profit like I've said earlier. And for those who are yet to join this rally, let's see if the market will present us with another opportunity. So the first thing I was able to observe here is the $11,900 mark, which is around here. It has been since price broke. Okay, first of all, let me label this area $11,900 level. Okay, so that we can have a visual understanding of what we are talking about here. So we have the situation here, and we can, as you can see here, we had this impulsive move that broke out of the channel at 11,850. We saw attempt by the buyers around the 11,000 area to push price further up, but this was met with strong resistance from the sellers, which finally pushed price further into the channel area, followed by buying pressure here, and we joined the rally from this level. So what I'll be saying for those who had missed out on this opportunity is that we should wait for price action to break out of the $11,900 mark. Look out for retest of structure in our lower time frame, buying pressure around that area to join the rally to the upside. So this is the one scenario we are going to be looking forward to during the New York session today. And then the other scenario is this. Remember, we had this bullish trend line that has been holding buying pressure since the later part of last week, and it was also a selling zone for participants in this market. So it has been a major determinant of price action since last week, and we saw the breakout of that structure here, the trend line, and price has continued to respect that trend line since the beginning of this week. So we saw the situation here. So in addition to the $11,900 level, this bullish trend line will also be serving as our yardstick for trading opportunity as we head into the New York session today. So how are we going to be using this trend line? Well, if price continues to the upside, we continue to look for opportunities to add more position as long as price is above that trend line. But if at any point in time we notice that price breaks down that bullish trend line at the point, well, I want to see this as a bearish signal. So we need to start getting ourselves prepared for a momentum shift if price breaks down that trend line. And if it does, remember, we are not getting too excited, as we want to remain patient to wait for price action to give us further confirmation, which is likely going to come in the form of a retest of that trend line or probably the $11,850 level. Look out for selling pressure on lower time frame to join the decline to the downside. And remember, we still have our take profit target for sellers around this area. Remember, at the beginning of the week, after taking into consideration this impulsive move to the upside from here that started last week, and from a technical standpoint, whenever we have an impulsive move, we know that at one point in time, price is likely going to come back to do a retracement phase, which is going to be a reflection of profit-taking activities in the market. Those who took advantage of this move right here will want to be selling to take some profit, at least in the meantime, before the second wave of that bullish momentum happens. So if a breakdown of that trend line happens, retest of structure, then we want to be identifying somewhere within the 50 and the 78.6% area as an area we want to be using to take our profits for the sell opportunity. And at the same time, this area will be serving as a buy zone, because if price comes within this level and we start seeing reversal patterns here, we want to get prepared to join the trend continuation, the incitation of the second wave of the bullish momentum that started last week. So that is the scenario we are looking forward to on the US tech. So I will be advising us to get ourselves prepared for any of the scenarios that might likely happen at this point. Ensure your stop loss is moved accordingly to lock in your profit, and let's see how price action plays out in the next 24 hours. So that is that on the US tech. If you have any questions, feel free to drop in your inquiries in the comment section, and I will make sure that I check it from time to time to see if there are any questions in that regard. So with that being said, let's dive into the next pair, which is the EURUSD. And before we go into the EURUSD, we are treating the pairs right now. I was able to spool out some couple of events on the economic calendar that will be serving as a catalyst for price movements during trading activities for today. In fact, I have the USD retail sales coming up in an hour, okay, 2 hours from now. That's the retail sales MOM month-on-month October, and the retail sales group control group also for the month of October coming up in 2 hours from now. So we want to be getting prepared for that as well. As participants in this market, we will be anticipating this event, and we will obviously see the reflection of this anticipation on the charts as price action. Then we also have the president, the ECB's president Lagarde speaking in 6 hours from now. So we also want to get prepared for that. That's also a very key and important event that will be driving price movement. So with this information we have here, let's keep it at the back of our mind as we dive into the charts and see what is going on right now. Well, on the 1 hour time frame, let's quickly do a quick replay of what our expectations were as at yesterday. So where were we during the live session yesterday? So we were around I think around here. All right, so we were around here yesterday. Okay, we were around the 1.0142 level. That was where we were yesterday, and I told you that we had a channel right between that level. Hold on a second, I think I got this number incorrectly. So it is 1.04120, I guess. Yes, 1.04120. That's it. So we have this channel running yesterday that is between the 1.01420 and the 1.03900 level. We can see we had a consolidation phase around here before the breakout of that structure happened. And I told you that with the breakout of that structure, a retest will be giving us another opportunity to add more position to this trade. But this is not what happened yesterday. We saw price climb up, then came back to take us out of our position, of our previous position, and price continued to climb to the downside. And if you remember vividly what I made mention of yesterday, I said there are two options that we want to be looking out for here. Remember, we had this bullish trend line figured out at the beginning of the week. As we can see, that line has been holding buying pressure since the later part of last week's trading session, after connecting the series of higher lows here rather. And we had this impulsive move that we took advantage of at the beginning of the week. Remember, we took advantage of this impulsive move as price took us about how many pips before we started seeing that sell momentum? Over 100 pips before we started seeing that selling momentum here. And one thing I said here yesterday was that if price continues to the downside and we don't see any buying pressure around the 1.04120, there is a likelihood that price might come back into that bullish trend line before a trend continuation to the upside happens. But what happened yesterday was quite interesting. Price broke down that structure, broke down that bullish trend line to give us a bearish signal, because from a technical standpoint, whenever we have the breakdown of a structure, we expect that price might likely be a bearish signal. And then we saw a retest of the structure. We took advantage of that move, locked in our profit, and price took us out of that structure again right above the 1.03600 level. And during the early hours of today, when I opened my chart, I shared this on my TradingView platform. I saw a situation where price was caught within a channel here. You can see we have this channel here. Price was caught within this channel, emphasizing the indecision in this market. So there are two possibilities that I was looking forward to during the New York session, during the early hours of today. Well, the first one is a breakdown of this trend line. That is, price breaks down this trend line, retest of structure to send price crashing to the downside. And if that does not happen, if price breaks above the 1.03900 level, retest of structure will be giving me an opportunity to join the trend continuation to the upside. And this is exactly what happened. Price moved to the upside, retested the 1.03900 level to give us that bullish trend continuation structure that we saw here. So for those who are taking advantage of this move right above this 1.03900 level, kudos to you for being on standby to take advantage of that move. At this point in time, what we want to be doing here is to lock in our profit, move your stop loss to lock in your desired profit, or probably move your stop loss to the entry zone, so that if price comes back taking us out of our position, you will neither be in a loss nor profit at this point. So that is the scenario we were looking forward to, and price has moved in our favor. As we saw the situation, price continued to climb up to the upside. So now, for those who had missed out on this opportunity here, what is going to be our plan as we head into the New York session today? Well, if we look at the current structure here and see the way things are going, I will be suggesting that let's wait for this candle to close. We want to see an engulfing candle close, and then price comes back to do a retest of the structure, looking out for buying pressure here. And this might likely happen towards the Lagarde speech later on today. We never can tell. And if that happens, we look over buying pressure, then we join the trend continuation to the upside from there. But something caught my attention here. Despite the fact that we are looking for bullish momentum here, there is something that caught my attention, which I will be sharing with you in a moment, and that is somewhere around the 1.04700 level. Look at what happened here yesterday. We had the sharp rejection of this level, giving us a sign that selling pressure is around that area. So there is a likelihood that we might be seeing selling pressure around this area. We don't know how far that selling pressure will go. It might come back, it might come down into the 1.04120 in form of a retest of that structure to send price going further to the upside, or it could lead to a further significant breakdown that will send price crashing to the downside. So in order to understand what is really going on around here, I need us to scale up to the higher time frame, and let's have an holistic view of what is going on around the 1.04500 area. But before we do that, okay, let's go up to the daily time frame first of all, and then we'll come back here to make a decision here. So we have the daily time frame running here. And if we look at the current structure we have on the daily time frame, it's obvious that price action has been on a bearish momentum since the beginning of the year. And because of this, I was able to connect a series of lower highs here to give me that resultant bearish trend line. And we have a major trend line here, guiding us to the downside. But the most important structure that we have here on the daily time frame is the 1.03750 level. And what do I mean by that? If we go to as far back as the month of May, we saw how this level has been a major determinant of price action. Look at what happened here in the month of May. We saw buying pressure from this area, and the same thing happened in the month of June. When price came back here, participants deemed it fit to buy the euro, but this pressure here wasn't strong enough, as it was met with strong resistance from the sellers, which finally led to the breakdown of the structure during the later part of the month of June. And since the month of June, price has continued to trade right below the 1.03750 level to emphasize the strength of the sellers at this point in the market. Now, if we look at what has been happening in the last 4, 5, 6 days now, we saw price edging towards that 1.03750 level. We saw a situation here where price was price has come back into the bearish trend line. That is one thing, and this tells us that we are at a very critical point in the market right now, as we need to understand what is really going on around here to make a further decision on this one. So at the beginning of the week, we actually projected two scenarios here: a possible reversal pattern here followed by selling pressure on lower time frame to send price crashing further to the downside, or a situation where we have a trend continuation pattern around here to incite a trend continuation to the upside. So these are the scenarios we were looking forward to at the beginning of the week. And like I showed you on the 1 hour time frame, we saw the sharp rejection here on the 1 hour time frame of that level during the course of yesterday, hereby making yesterday's candle close in form of a shooting star, which is a sign of a strong bearish possible momentum coming in at this point. Though we had this engulfing candle running at this point, we can't call it an engulfing candle yet because it still have a long way to go. We still have over 12 hours for this candle to close at this point. So what we want to be doing now is to scale back down to the 1 hour time frame. Let's see what is going on around here. Remember, we are at a very critical point in the market, right along the bearish trend line. It could turn out to be a bearish momentum, so we need to get ourselves prepared if this bearish momentum is going to be coming in from this level. So going back to the 1 hour time frame here, what do we have? So if we scale back to the 1 hour time frame, we have a structure here. So what I'll be doing now is to identify that rejection we witnessed during the New York session yesterday by bringing our line chart so that we can have a very good point of connection. So I will be replicating this hub here. So we have the 1.00450, 1.04500, I guess. 500. So we have the 1.04500 area. So 1.0445, I guess. Okay. So that's what we have here. So we have the 1.04450 level. So we map that out now, and that's going to be another structure we are going to be using for trading opportunities as we head into the New York session today. So what I'm going to be looking forward to is this. For those who had missed out on this opportunity here, for us to be buying the EURUSD, we want to be patient enough to wait for price action to take out all the sell position here to give us a bullish signal, which might likely come in the form of a breakout of the 1.04450 level, after which a retest of structure followed by buying pressure on our lower time frame will incite a trend continuation to the upside. And if you look at how important that 1.044500 level is, you can see it also lines up with this bullish trend line that we have here. So if we have that situation coming in, that is price breaks out of that structure, retest it, followed by buying pressure, it lines up with the bullish trend line, and we are good to go on the EURUSD to the upside. However, if we start seeing selling pressure right below the 1.04450, so the only way we can identify this is when we scale down to our lower time frame and we start seeing selling pressure around that area evolving into a reversal pattern, then definitely we want to be negating or buying opportunity here and look out for selling opportunity at the breakdown, most especially of that bullish trend line, retest of structure. Then we want to be joining the decline to the downside. So these are the two scenarios we want us to be looking forward to during the New York session today. So my hope is that we get ourselves prepared to take advantage of this move when it finally happens. So thank you very much for this. Then if you have questions, please feel free to drop in your inquiries in the comment section. And I think I can see Steamroller in the house. Good morning, Steamroller. How are you doing today? Okay, so Steamroller wants us to do silver. All right. I just hope there is time. Anyways, I will check the YouTube channel. Otherwise, if you don't have time but manage to post there, okay, I will see what I can do about that. Okay. All right. So moving on to the next pair, I have 10 minutes left to do two major pairs now. So let's see how fast I can run through this. So we have the GBPUSD, which is the next pair we are going to be looking at. And on GBPUSD, we continue to look for buying pressure since the beginning of the week. And one thing, okay, hold on a second. Let me delete this so that we can have a clean chart. All right. So we have this situation. Hold on. Okay. So this is the situation we have here since the beginning of the week. We had a situation where price was caught within a channel. Let me zoom out a little bit so we can see the channel here. So we had a channel right within the 1,07750 level, that is this area, which was holding buying pressure since the beginning of the week. Then we have a resistant level at the 1.184500 level, which was a level that was holding selling pressure, which led to a final breakout. We had the final breakout of that structure during the course of yesterday's trading session to incite that bullish momentum that we are looking forward to. So the breakout of the channel gave us that leverage to join that rally to the upside. So we had this opportunity here. On Monday, we took advantage of this right from the 1.17750 level, and price actually hit my take profit target here at the 1.19780 level with about how many pips was that? 125 pips in profit. And for those who are part of this trade yesterday, kudos to you. Congratulations for locking in that profit on the GBPUSD. So on the GBPUSD for this week, we are profitable already. Now, we had a situation yesterday where price came back to do a retest of that structure, which is more or less in line with the technical expectation. Price came back to respect that bullish trend line one more time, evolved into a reversal pattern with the 1.1800 level serving as a neckline of this current reversal structure that was identified here. I shared this on my public platform this morning, and I said if price breaks out of the 1.1800 level, that is, we cite a breakout retest of the structure, we want to be joining the rally to the upside. And this is exactly what happened as the buy position was triggered, with price is currently running with over 60 pips in profit at this point in time. So for those who are taking advantage of this move this morning, kudos to you for being on standby to take advantage of that move. And for those who took it right from this area too, kudos to you, as you will be in more than 80 pips in profit at this point in time. So as we head into the New York session today, what is going to be our plans? What are we going to be expecting on the GBPUSD? But one thing I would like to state here is this. Despite the fact that we are looking forward to buying momentum on the GBPUSD, and for those who are already in this trade, you know you have to lock in your profit at this point because we never can tell what could happen in the next couple of hours. And if we look at the economic calendar today, we saw that the pounds, we had the consumer price index that came up earlier this morning, which was a very positive figure for the pound. We had 11.1% with a 2.04 deviation. Compared to what the consensus were expecting, which is a very good figure for the pound, and I think that has driven the bullish buying pressure we've been witnessing since the beginning of today. And there's still something coming up again in the next 2 to 3 hours, and that is the Bank of England monetary policy report hearings coming up in 3 hours from now. And this is also a very high impact event that will be serving as a catalyst for price movements for today. So we don't know how this is going to affect the pound, but one thing I want to say here is that during the course of yesterday, we saw a sharp rejection of the 1.19800 area here, where we saw selling pressure at that point. So there is a likelihood that we might be having selling pressure around that area too as well. So what I'll be doing here, let's identify that structure so that we can have a better perspective on how to trade this, and this will also make our trading easy during the New York session. So we have the 1.19700 level. So let's label this area. So we have it at the 1.19700 level. So we have a resistance point there already. And let's go back to our candle chart. So we have that level figured out at this point. Now let's extend this bullish trend line. So we have these are the parameters that are guiding our trading activities for this week. Then we have the 1.18 also extended a little further. So those are the parameters that are guiding our trading activities for today. So one thing I want us to be doing here, for those who are already in this trade, lock in your profit. And for those who had missed out on this opportunity, well, I will be advising you at this point, let's remain patient and let's see how price action will relate to the 1.19700 area. How are we going to be having a breakout of that structure? That is one scenario we want to be looking at. If we have a breakout, then a retest will be giving us further confirmation to join the rally if we start seeing buying pressure on our lower time frame. So that's the first scenario we are going to be looking at. Then the second scenario we're going to be looking at is a possibility where this area might turn out, price action might evolve into a reversal pattern where we start seeing selling pressure right below the 1.19700 level to send price crashing to the downside, or probably coming back into this bullish trend line to send to incite another wave of bullish momentum. So we never can tell. So at this point in time, we need to be very careful. We are waiting for the major event coming up in 3 hours. Let's see how price action relate to that structure, after which we'll be making further decision on this. So for the GBPUSD, the two parameters we have is the bullish trend line here. So we don't want to, as long as price remains above the bullish trend line, we want to be comfortable in our buy position. And if at any point in time price breaks down the bullish trend line, break down the 1.18800 level, then we want to be seeing that as a signal that there is a likelihood that selling momentum might come in at this point, after which a retest of structure might be sending price crashing to the downside. So these are the scenarios we want to be looking forward to on the GBPUSD. So my advice is that we remain patient so that we can be on standby to take advantage of that move when it finally happens. So that is that on the GBPUSD. If you have any questions, feel free to drop in your inquiries in the comment section while I move on to the last pair that we'll be taking for today. And the next pair we'll be taking for today is the XAUUSD, which is the last pair we'll be trading for today. And welcome, Innocent Babe. I just saw your post. How are you doing today? Hope you're doing well. All right. So this is what we have here on the GBPUSD, the XAUUSD. In fact, we are very, very profitable since the beginning of the week. We have been on profitable terms as we continue to hold on to buy position here on the XAUUSD. So how did the week started? The week started on the as a consolidation phase. We saw this huge consolidation phase between the $1,773 level and the $1,755 area. So we saw the support level of the channel here, and we saw the resistance level of the channel around this area. And one thing I stated here yesterday was that on the beginning of the week is that we want to remain patient to wait for a signal to give us that opportunity to either join a decline or a rally. And this will either come in the form of a breakout of the structure or a breakdown of the structure to give us that leverage to join any trading opportunity here. Now, what happened here on Tuesday was quite interesting. We finally saw the breakout of the structure. Remember, I showed you this on my public channel where we saw this consolidation phase, though we had selling pressure around the resistance level of this channel. But what gave me the confidence of buying this was the fact that the selling pressure here wasn't strong, as it could only go as far as the $1,768 level. And if you look at what has been happening here, we see that buying pressure have been pushing market from that level. So in order to, because of this information here, we took advantage of this buy momentum here on Tuesday, which gave us over 1,000 pips in profit before we saw the selling momentum bringing price right back into that entry zone. And what we saw here again was also very interesting. We saw multiple rejection of the 1,768 area. In fact, it lasted for about 5 to 6 hours, giving us more opportunity to either add more position to the trade or joining it outrightly. And price moved with approximately 1,000 pips, I guess 800 pips thereabout, before again price came back into the 1,773 again as at this morning. And one thing you will observe here is this: you will notice that price has been caught within a consolidation phase. Yes, that is right within the 1,773 and the 1,783. So price has been caught within both this consolidation phase here at the 1,773, right above the channel we identified at the beginning of the week. And then we have another selling pressure right around the $1,783 level. So for those who are taking advantage of this move right above the 1,773, what I'll be advising us to do here, lock in your profit at your desired profit target or move your stop loss to break even, whichever suits you. And let's remain patient and wait to see how price action will be relating to the $1,783 level. As you can see here, we started seeing selling pressure here, and this is peculiar with what has been happening since the beginning of the week. We saw selling pressure here on Tuesday. We saw it here again in the later part of the trading session on Tuesday. We saw it here again on Wednesday. You can see how that level has been holding selling pressure since the beginning of the week. So we want to be very, very mindful of joining any bullish potential around this area. So what I'll be advising us to do here, make sure you have locked in your profit Move your stop loss accordingly to lock in whatever profit you want to block at this point in time. And let's see how price action will relate to the $1,783 level. So one thing I want to be seeing here to buy the XAUUSD is to see a significant breakout of that structure. I want to see an engulfing candle taking me out of that structure in such a way that all the sell position here is taken out outrightly, and if that happens, then I want to be confident of adding more position to my existing trade if I cite a retest of structure followed by buying pressure on my lower time frame right above or around the $1,783 level to join the trend continuation to the upside. So that is how I want to be adding more position to my existing trade on the XAUUSD. However, if during the New York session today we start seeing selling pressure around this area evolving into a reversal pattern on our lower time frame followed by selling pressure right below this level, then there is a likelihood that price might come back again into our entry zone. But even if price comes back into our entry zone, even if price is coming back down, I'm not going to be selling this because I want to be waiting for a signal to happen. But if you are a short-term trader, a counter trend trader, well, you might want to be taking advantage of that move right into this level, which might give you around 900 pips to catch there if price moves in that area. But one thing I'll be saying here for me, what I'll be doing here to sell the XAUUSD is this. Let me bring out my line chart and show you something new here. So looking at the structure here, we have lower highs here. So we can connect the series of lower highs here to give us that resultant bullish trend line. And as you can see, since the later part of last week's trading session, price has continued to respect that trend line. Let me do some readjustment here. Okay, so you can see how this level has been holding bullish momentum. As soon as price comes into that area, we see buyers taking over the market from that level. You see the same thing happening here. We see the same thing happening here. The same thing also happened during the early hours of today. And for me, this is a sign that we might be having a trend continuation to the upside. So in addition to the $1,783 level, which shall be our trading guide for today, is this bullish trend line here. As long as price continues to trade above that bullish trend line, we want to be comfortable in our bullish momentum here on the XAUUSD. However, if at any point in time price breaks down that bullish trend line that is taking us out of our buy position in such a way that price breaks down that 1,773 level, then we want to be seeing this as a bearish signal. And one thing I want to say here is that we want to remain patient. We are not getting too excited, as this is only just going to be a signal, as we need to see further confirmation to give us that leverage to join that decline. And this is likely going to come in the form of a retest of either the 1773 or the bullish trend line here, after which we look out for setting pressure on our lower time frame to join the decline to the downside. And for me, the decline here will be a retracement of the impulsive move that started last week. Remember, we had this impulsive move that started last week, breaking out of that very important key level at the $1,680 area. So if this is going to happen, that is, price breaks down that bullish trend line we just identified now, does a retest with selling pressure on our lower time frame to the downside, we want to be joining that decline and using this impulsive move as our yardstick, bringing out our Fibonacci retracement tool, running it through the previous impulse leg. We should be aiming at somewhere within the 50 and the 78.6% of that previous impulse leg as our TP target for sellers. So let me label this area for sellers, TP target for sellers. Then it will also be a buy zone for long-term buyers. So we have this identified here. So let's bring it inside the box. All right, and then we give this a color yellow. All right, so that's what we have. And if we look at the buy zone we've identified, we look at the golden zone area we've identified here, you can see how important that level is, sharing a confluence with the $1,680 level, which has been a major determinant of price action since the beginning. I think in the last couple of months now, that level has been a major determinant of price action. So if price comes within that level, that is, drops further to the downside into that area, then we want to be looking out for buying opportunity here to join the second wave of that bullish momentum. So this is the scenario we are going to be looking forward to as we head into the New York session today. So zooming back into the current structure we have here, like I said, the 1,783 has been holding selling pressure, and we can see selling pressure coming in here. Please ensure you have moved your stop loss to lock in your profit. So if price breaks down that trend line, then we want to be joining that decline to the downside. Take advantage of that counter trend opportunity. And if a breakout of that level happens, that is breakout of the 1783, retest of structure, buying pressure on a lower time frame, we have an opportunity to add more position to our existing trade. So that is that on the XAUUSD. I hope I made myself very clear and I was able to paint out all the possible scenarios that is likely going to be happening on all of the pairs. We took advantage. We are monitoring since the beginning of the week. So what we need to do is to be on standby to take advantage of any of this opportunity when they finally happen. So let's quickly do a quick recap of what our expectations are for today. For those who missed out the early minutes of the session. So let's quickly do a recap of what we talked about today. So the first pair we looked at today is the US oil. And remember, I told you we have been profitable on the US oil so far for this week. Remember, we took advantage of this bearish momentum at the beginning of the week, which gave us over 500 pips in profit. And then we finally saw another reversal pattern here, which led into the breakout of the $85 level, giving us a leverage to join that bullish momentum. And it appears price came back to do a retest of the structure. And I told you that we want to continue to look out for buying opportunity at this point. Now, for those who are taking advantage of these opportunities since yesterday, I've told you to move your stop loss accordingly, lock in some profit around this area. And for those who missed out on this opportunity, well, I said, let's be patient enough to wait for a breakout of the $87 area, retest of structure. It could be the retest of the $7 level. It could be the retest of this bearish trend line, which has been holding selling pressure since the beginning of the week. Remember, I identified this trend line here, which has been holding selling pressure since the beginning of the week. So if we have a retest of either the $87 or the $86 area, we want to be joining the trend continuation to the upside. So that is the scenario we are looking forward to on the US oil. Now, there's another catch here. What if the bearish trend line here that has been holding selling pressure since the beginning of the week continues to hold selling pressure? Well, the only way we can know this bearish trend line will continue to hold selling pressure is if we see price break right back down the $85 level. That is, this trend line holds again, and we see something like this. Remember, we saw this back into the trend line. We saw this move back into the trend line, consolidation phase around here, and then if price breaks down that previous low here, taking us out of our buy position, then we want to be looking at this as a signal, after which a retest of the structure here or this bearish trend line followed by selling pressure on our lower time frame will give us that leverage to join the decline to the downside. But I doubt this will happen, but we never can tell. If it happens, let's get ourselves prepared to join the decline. And if you can see, breaking down the $85 level lines up with the demand zone we identified since the beginning of the month. So if price breaks down that structure, reaches that level, is more or less a sign that selling momentum has come to stay. So that is that on the US oil. Then we went on to talk about the option US tech, where we've been taken out of our position right now. So we identified the structure here. Remember, we took advantage of this move here yesterday, where we took over, let's see, how many pips was that yesterday? We took over 200 pips in profit before the sell momentum happened here. And going into the New York session today, I was able to identify structures around the $11,900 level. And I told you that for those who are taking advantage of the retest of the structure during the early hours of today, move your stop loss accordingly to break even, so that when price comes into our entry zone, we get stopped out at break even. And I said, for those who are not yet in this trade, we want to be patient enough for price to break above the 11,900, do a retest of that structure, which also lines up with that bullish trend line we identified to join the trend continuation to the upside. And I said something that we have two parameters that will make our trading activity easy during the New York session today. And these are two parameters. We have the bullish trend line here, the purple line on your screen that you can see, that bullish trend line, and the $11,900 mark. So if price climbs up the 11,900 mark, retest of structure, we are comfortable in our buy position. However, if at any point in time we cite a breakdown of this bullish trend line, this is a sign that there is going to be a momentum shift. And remember, we are not getting too excited. We want to wait for confirmation on our lower time frame in the form of a retest or selling pressure right below the trend line to join the decline right back into the zone that we have identified around the 11,400 and the $11,100 level. And the reason, how did we get this? This is as a result of bringing out our Fibonacci retracement tool, running it through the previous impulse leg to identify an area between the 50 and the 78.6% to give us an area where our take profit target for any selling momentum here could happen. And one thing I said here is, as soon as price comes within this level, we want to be looking out for opportunities to join the trend continuation to the upside from this point. So that is that on the US tech. Then we went on to talk about the EURUSD, where we have been enjoying bullish momentum since the beginning of the week. And for those who took advantage of this move right above the 1.03900 level, I told you kudos to you. And the next thing I said is that you move your stop loss accordingly to lock in some profit at this point in the market, as anything could happen from this level. And the reason why I said we should be very cautious here is simply because of the 1.04450 level, which was a selling niche for participants in this market yesterday. We saw as soon as price got into that level, it negated all buying pressure around that area to push price further to the downside. And it appears we are heading towards that level again as we cite another rejection of that level in the last candle. And one thing I said here is that for those who missed out on this opportunity, let's remain patient and wait and see if the market is going to be presenting us with another chance to join this potential rally. And what I said we should be looking forward to is a breakout of the 1.044500 level to give us that bullish signal, after which a retest of structure followed by buying pressure right around that area, which also lines up with that bullish trend line. Then we could actually join the rally to the upside. Then if despite the fact that we are expecting a bullish momentum here, we cannot ignore the fact of a possible bearish momentum considering what happened yesterday. So we saw this bearish momentum yesterday, and it's more or less a sign that we might be having sellers coming in at any point in time. As we can see, rejection of the 1.04450 still continues in the last hour. So let's see. For the trading activity for today, we have two parameters to guide our action. We have the bullish trend line here, and we have the 1.044500 level. So if price continues to trade right above the 1.004500 level, and this bullish trend line will remain comfortable in our buy position. However, if price breaks down that trend line, then that's a bearish signal. A retest of structure followed by selling pressure on our lower time frame will give us that leverage to join the decline to the downside. So let's get ourselves prepared for any of this possibility that might likely happen today. Then we went on to talk about the GBPUSD, where we are still in the buy momentum here. Since the beginning of the week, we've been enjoying this buy opportunity. We had price hit our take profit target here with over 200 pips in profit here as price tested the 1.197700 level. And again, price came back into our entry zone, followed by respecting that bullish trend line one more time, evolving into a reversal pattern that led to the breakout retest of the 1.18800 level to signal this trend continuation to the upside. And we actually took advantage of that opportunity during the early hours of today. And one thing I said here is move your stop loss accordingly, lock in your profit, as we don't want to get caught up in any sudden pullback that might likely happen here. Now, I said something here. We have a structure. For those who had missed out on this opportunity, please remain patient and let's wait and see how price action will relate to the selling niche here at the 1.19770 level. We want to see a breakout of the structure, retest to give us a confirmation to add more position to our existing trade or join this trade outrightly. If that does not happen and we start seeing selling pressure around that area, well, I'm of the opinion that we start thinking of selling if we see price rejecting that level one more time with selling pressure on our lower time frame, breakdown retest of structure, then we could join the decline to the downside. And if price breaks down this bullish trend line, that's another sign that we have sellers coming in retest of structure should give us another opportunity to add more position to our existing trade. So that is that on the GBPUSD. Then we close the day with the XAUUSD, and on the XAUUSD we have a similar scenario with what we have been witnessing on both the EURUSD and the GBPUSD. Now we are very profitable on this pair. Obviously, since the beginning of the week we have been enjoying this buy momentum right above the 1773 level, taking us right up into the upside. And one thing we have observed here since the beginning of the week, I think in the last 24-48 hours, we can see price has been caught within a consolidation phase right within the 1783 level and the 1773 area. So we are in an indecision right now. So I want us to be very patient here. For those who are taking advantage of this move at the beginning of the session this morning, kindly move your stop loss accordingly, lock in some profit, lock in your desired profit, as we don't want to get caught up in any sudden pullback that might likely happen at this point. Now, for those who had missed out on this opportunity, well, I said we want to remain patient here. Let's wait out for, let's see how price will relate to the $1,783 level. Are we going to be having a breakout of that structure? And if a breakout happens, then a retest of structure should be giving us a confirmation to add more position or join this trade outrightly to the upside. Now, to make our job easier for today, to make our trading activity easier for today, we have two parameters to guide our trading activity. The first one is the $1,783 level. If price continues to trade above this level, we want to be comfortable in our buy position. And the second parameter to guide our trading activity is this bullish trend line I was able to identify here after connecting the series of higher lows here. As you can see, price has continued to respect that bullish trend line since the beginning of the week. So, and it happened here again this morning. So if price continues to trade above this level, we want to remain very comfortable in our buy position. But if at any point in time price breaks down that bullish trend line, then we want to be seeing this as a possible momentum shift. And if this happens, a retest of structure followed by selling pressure on our lower time frame will confirm a sell continuation to the downside. And for me, I told you that if a breakdown of that trend line happens, well, I want to be seeing this as a retracement move of the impulse leg that started last week. Remember, we had this impulse leg. If we zoom out very well, we saw that we had this impulsive move that started last week into this area. And if a breakdown of that trend line happens, then I want to be having my take profit target somewhere around here, right within the $1,700 level and the $1,660 area as a take profit target, where I said we want to be looking out for buying pressure here to join the second wave of that bullish momentum that started last week. That is if price breaks down this trend line to the downside. And if you see how important that level is, it also shares a confluence with the $1,680 level, which has been holding selling pressure in the last couple of months. I shared that on the daily time frame. So let's see how price action relates here on the XAUUSD. The 1783 area is a very significant point at this time. So let's see what happens here. If selling pressure continues there again, then we might be seeing price break down this trend line to send price crashing further to the downside. But if a breakout happens, we want to be comfortable in our buy position and get ready to add more position to our existing trade. So this is what we are going to be looking forward to on the XAUUSD for today. And on this note, I want to be calling it a day. I really appreciate every single one of you. You have been very participating in this session for today. I really appreciate. Okay, Temtal, good morning to you. 196, I hope you had a very informative session. Okay, 2018, thank you for information on that. Oh, thank you, you're welcome. I'm glad you found it informative. So on this note, I want to call it a day. And remember, don't get too excited when we have a breakout of a structure. Please remain patient on your lower time frame. Wait out for structures, wait out for confirmations, which will likely come in the form of a retest of structure before joining the potential rally or decline at that particular point in time. Well, and also remember that we have some major event coming up today. I showed you for the USD, the retail sales, which is coming up in an hour from now. And then we also have the ECB president's speech coming up in 4.5 hours from now. and we have the BOA monetary policy report hearings coming up in 2 hours from now. So all these events are likely going to be a catalyst for price movement, and we are going to be seeing the reflection of this anticipation on the chart as price movement. So we want to get ourselves prepared for all these events as they unfold before a while. So I hope to see you sometime tomorrow, 10 a.m. UTC, 11 a.m. West African time, and let's review the market one more time. You're welcome, Innocent Babe, and I wish you best of luck today. Do have a wonderful day. Bye bye.